Good morning, guys. Welcome to this Monday, July 28th. And we got a gap up going on. The market gapped up at the open. The EU trade deal was announced over the weekend, and bops, there we go. So before the August 1st deadline, some of the more important partners are closing their deals, and everything looks like it's going to work out just fine. So market popped to the upside. Now the reverse retest in the close of yesterday or yesterday or Friday. We'll see how this whole thing shakes out in terms of how strong this pop is to the upside. But the fact that they have trade deals going on right now, being closed and being settled, is a very good sign, and that means that the all this tariff hysteria is going to be kind of put on the back burner. There's going to be some basic one-time cost increases on goods, some of the goods due to some of these tariffs, but if you know how that works, it's just not a straight pass-through. A lot of that gets eaten up by or gets passed on or split out, divvied up, if you wish, between the various players in the supply chain. So it usually doesn't end up being a full pass-through to the customer. So uh, and I'm not seeing any big deal out of it in terms of a big shock or price shock or anything like that. So that inflation fears people keep talking about based on tariffs, I think it's going to be pretty light at this point. Anyway, we'll see how things shake out on that side. But at this point, we are in pretty good shape, I think, to get the week started. This is the last trading week in July. August 1st is on August 1st. Yeah, August 1st is on Friday. So we got a pretty busy news week. I was looking at this morning. I think today, Dallas Fed manufacturing. Today, it's not a whole lot of stuff going on today, 10:30. That's just nothing at 8:30 today, but Dallas Fed at 10:30. 5-year auction, 2 and 5-year auctions later on today. Then we have the federal, the FOMC meeting beginning tomorrow with an announcement on Wednesday. Let's see what they're going to do with interest rates. Probably stay unchanged. It would be pretty good if they dropped it. That would be a good sign, a sign of faith, I guess. But we'll see as they what kind of excuse they're going to give this time, if it's going to be a tariff concern again or not. But I think I'm hearing it from from a lot of areas right now, but how the Fed rates are kind of higher than it should be, and it's starting to look like it's starting to look political again. So it's when even you have some of those fund manager, which usually are not very much on the right side of the aisle, saying the same thing, then there's something to it, you know. If you only have like a political thing to it, then yeah, fine. But if it's you start hearing people or fund managers or players which are not necessarily political start talking about it, then yeah, well, it's starting to look like they need to do something. So if they do something this time and the Fed meeting drop the rate, there should probably be a pretty good reaction to it. Tomorrow, though, so tomorrow we start that meeting. We had some more stuff, housing data, we had consumer confidence, job openings. Then we had the Fed announcement come out tomorrow. We'll see what to do on the rates, how that's going to be interpreted. That could be a pretty busy day. Usually that reaction spills over into Thursday if it's some sort of a reaction. You usually get a pretty busy Thursday based on that. But also on Thursday, we get the personal income. So we get the CPI read on Thursday. And then on Friday, we have employment situation, August 1st, first Friday of the month. So we got a busy week. So we have inflation data, unemployment, or inflation data, employment situation. We got Fed meeting, busy midsummer week, if you know what I mean. So that's how the week looks. Busy in terms of news. A lot of things could potentially change this week. Week starting off great though, popping to the upside. So with that news and nothing really right now in terms of the news cycle, which is scaring us, we're going to say starting off on the long side of the market. I'm going to buy weakness. Again, the edges on the way down here are the 2-1-63.50 and the 63.15s. But we got a little bit of range right now between them, so it's starting to grind to the upside. And I would just start off on the long side. Just to be mindful, this is new highs on light volume, and this week's news could certainly whip this around pretty good. So At this point, we're starting from the long side. Things can change pretty quick though, depending on what happens on the news side of things. So this morning, starting to looking to buy against the 64.30s, 64.15s, and this little two-letter ledge here, little gap right there. The low of Friday, 6400s, 63.95 and 63.85. These two support areas. I would say that this area of support, 6400, 63.95, 63.85, it's going to be key for holding this together. So if we get early weakness and knock it down to that low, Friday's low, 6400, and that holds, I think we're in good shape. If they start taking that lower, I would still look to buy against the 6400, 63.95, and 63.85s. But if all that stuff comes out, 85s, you are looking at us retracing these single prints heading back down toward the 63.50 edge and maybe even lower. So we'll see how it shakes out. Sometimes you get days like this, you can get pretty good rundowns as early weakness. So look for that. I would not be trading it super aggressively. If it starts happening, I may try something there, but um, it's when you point it higher, you want to try to stay on the long side of it. So unless you see really good setups on that early weakness and they really start leaning into it, and you have a good momentum play going there. And that's the only type of trade I would play because it basically that kind of a trade it's really just about selling the lower light slight pullback and hope it doesn't end up being a turning point. So key thing on those moves, if you get early weakness, is to not sell into one of these support areas. If you sell in if you get short when it starts breaking out and you get caught in a fake out move on the downside, so be a tight stop saves you there. But if you try to get long, get short right into support, the chances are you're just going to get bounced out of that trade pretty quick. If they start taking out the support area and start running lower, that's when you try to get on it. But usually those moves means you're going to have to be selling the low of the day. It was setting the low, and that's just not a comfortable trade. So no matter how you do that, it's like a double-edged sword, and but sometimes you get on in a nice trade that way. So, but the key there is like you start seeing some early weakness and some momentum in that early weakness. That's the key thing. If it's just some action, then I would not be super aggressive on it. And you'll know the difference. When you see the market just tanking, and it's like, oh my God, what's happening? Then yeah, that's early weakness. But usually when you see that, you're a little bit late to it to the move as well. So and nothing is easy or given up for free, put it that way. But initially, I'm going to be trying to be patient, look for long setups down to these areas, the 6400s. Below that, a couple of more levels to look for long setups again. And if that happens, if all of them comes out, then I'm going to hop on the short side and see how far they can take it on the downside. So, in other words, they start taking out, if you look at capital flow, they start taking out little volume edge, you start crossing this big low volume area. You want to be on the short side of that and see how far they can take it, because the next support area is going to be down here at the 63.50s. So you had that 60-40, it's a good 50-point range that you have potentially in your favor. So we'll see how that shakes out, but that is the starting point for today. On the way up, I'm not going to be very aggressive on the short side unless I get some early strength as part of a potential move to the downside. You won't know that though until you see the whole thing coming apart. So I'm not going to be very aggressive on the short side at all. I tend to look for shorts when if they start running higher when they get into one of these areas, but trying to get a good setup and a trigger, and then not a super aggressive short. And in other words, looking for a setup and trigger. It's stepping in front of it, not recommended. So I have that problem myself in my own personal trading. I get excited about it, try to get the best trade location, and then you give up a lot of certainty for that trade location, and it's usually better to be patient and let the market develop in front of you before you take your trade. But that's just patience. You have to practice patience. Hard thing for me to do, I can tell you that, but that's what you have to do. Looking at the NASDAQ and the bonds. So bond market is pretty much in the range still. They're just going back and forth. So the reaction, and there was a small reaction, but not as you can see, not a big reaction whatsoever. So they're pretty much staying in the range. If you look at they're pretty much coming to pretty good balance. So this week though, with the Fed meeting, with the CPI, personal income data, a potential employment situation, we have a good shot at this actually moving. So we'll see how the bond market digests this week, but there could be a directional move on the bond market this week. Initially for today, we have nothing going on today, so I'm just start range bound. Looking to sell strength, 13 to 14s, the 1920s, 24s up to the 113.30s, London high. Looking to buy against support, 1308s, 1302s, 1228s down to that level, 1220. So get decent range to trade in, but I would just start off range bound. And sometimes you get this like one of these grinding moves towards one side of that edge, but it's still technically range bound. Just how to be watching the edges and or support or resistance areas and try to be patient about your entry. Bond market is difficult that way, but they tend to honor the edges pretty well. So but that's kind of I would be I haven't tried to trade bonds for a while right now, but it's if I see a good setup, I may take it, but it's too slow and you have to be super patient. As I just said, it's a difficult thing for me to do. Nasdaq. Here we have some action going on. So we have a nice pop to the upside. They finally broke out to that 23,420 level and extended up on Friday, gapped up, of course, today. And we are reverse retesting the high of Friday, 470 so far. Looking to buy weakness in that guy as well. So at this point, against the 470s, 420s, down to the 380s. Below 380s, I would take off the long bias and go back more range bound. And at that point, they kind of back down in this lower range again. Still looking to buy against support, I think, to the 330s, maybe even down to the 380s. So to this low volume area, I would be looking to buy weakness. So even if you trade back in that range, I'm looking at that 300 to 320 area. That's basically the low of Friday. You can see it here on the F2 as well. If that level comes out, I would be more inclined to worrying about the short side. So that's how we get started on the Nasdaq. And on the way up, also it's not very aggressive on the shorts at this point. We are in a move out of the middle to the upside again and trade it as such. You don't want to fade it aggressively, even if it's tempting, and even if you do it, sometimes you realize it right away, like, oh shit, I shouldn't have done it. So there we are. And the buying and breakouts as well on the upside is also something you have to watch when you're making new highs like that, because it's also something which they tend to try to run it higher, suck you in, and just run it down. But it's not a sell-off. It just runs it down enough to shake you out of that trade. So if you want to see it and try to make new highs, back off a little bit, and that's your entry point if you want to get long. If they keep backing off, you want to be out of that thing. So that's kind of how you had to approach it. But looking to buy weakness at this point against the 470s, against the 470s, the 420s, 380s, down to that 330s for rotations back up. That low volume area at the 300 to 320s, that's the one which has to hold for this whole thing to work out. All right, so we'll see how keen the market is going to be to materialize the little good news they got over the weekend. And then finally, oil and gold. Now, oil is moving a little bit. It'll pop right there, but it's still pretty much in the range. It looks bigger on the F4 and not so big on the F2. And if you look at the, that should be my oil chart, yeah. So my oil chart capital flow is still just kind of backed off that lower edge. Nice ledge, right? 64.50 to 65. Nice support area right there, right above that low volume area. So far that's holding. And we're just backing off it a little bit higher. So with trade deals coming together, I mean, that's going to be that could be also a demand picture for oil, coming small component of that. As potential hurdles for trade wars and higher prices and all that stuff starts to mitigate, then growth is in the pipeline, and growth usually means more energy needs, which is a demand component. So if you it could be short-term demand expectations coming into oil here, but the production is going to totally outweigh all that stuff. So I mean, they are all hands on deck when it comes to energy. So we're going to be prices are going to come down just sooner than later, I believe. But I would just start range bound on oil, looking to sell strength. Let me see before I minimize that. So I'll be looking to sell strength, 66.30s would be aggressive because that's where we are. 66.60s, 67.20s for rotations back down. Looking to buy against support, 66s, 65.70s, 65.30s, 64.90s, and 64.60s for rotations back up. This is 60. This is more 65, not 64.90, 65. So 64.70, 65, 65.30 for rotations back up. Include the 65.70 and 66s for rotations back up. So looking to buy against those support areas, looking to sell strength up to the 67.20s. And that's pretty much the range we are going to work in today. And then finally, oil. So oil, gold. I did oil, gold. And gold, look at that reaction on the news, right? That's something. That's that sucks if you have if you have trades in the market, you have overholding positions. This is the stuff which gets you all freaked out, right? You have a move like this to the downside at the open, and then right back here to value. So they're probably down pretty hard. I would probably be inclined to look for weakness to get started, given the overnight reaction, but we are trading around this attractor area, the high volume area. So I would say range bound around 33.40 right now. If they start trading below that 33.25s, I would start looking for a potential move to the downside. See if you can retrace this to the downside a bit. If they start trading above the, I would say 33.50s, I would look more for a move to the upside. So that would be basically taking out that double level edge here. So they're going to sell strength up to that 33.50s, buy weakness down to the 33.26s, and then that's kind of the range we are going to work in. And then let's see if they start moving in one direction or another. But they start taking out that 25s, we can see a nice move to the downside. And if the reaction the overnight get replicated during the day session, that could certainly happen. So they're going to sell 33.40s, 46s up to the 53s for rotations back down. Looking to buy against 33.30s, 26s for rotations back up. So that's kind of the starting point on gold. As I said, not going to be super aggressive on gold one way or the other at this point. Just looking at the range bound trading there, let's see if they're going to be a directional move coming out of the news coming we got in over the weekend here. All right, so back to the ES. And that's kind of where we left it. They're reverse retesting the 64.30s right now. We'll see if they are going to try to knock that lower or not. But volume right now 120, so it's a little bit higher than normal. It's 100, yeah. So it's decent volume actually right now. So that's a good sign. And remember, this week is going to be busy. So we've got a lot of news on tap. Today is probably the lightest news day, and then we'll see how things shakes out throughout the week. So we'll wrap it there. Good trading, guys. And we'll see you back at 11:30 for the next update. All right, guys, later.